Let's talk about CoreLogic's monthly housing chart pack. It was just emailed out in the last few days, the first week of August, and there's a few pieces of information that we found very interesting that we wanted to share with you. So to start with, residential real estate underpins Australia's wealth. Now, residential real estate is now at a value of $9.9 trillion. Australian superannuation is at a value of $3.5 trillion. Australian listed stocks is at $2.9 trillion, and commercial real estate is at $1.3 trillion. The report goes into the breakdown of all the different states, and also capital cities are also mentioned, as well as regional centres in the different states and territories around Australia. But overall, the Australian dwelling values within the 12-month changes, Australia has had minus 3.4% change in dwelling values 12 months to July 2023. And housing cycle, so the rolling 28-day growth rate in CoreLogic's daily home value index. In July, Sydney dwellings rose. The values rose by 0.9%. Over the quarter, values increased by 4.5%. And over the past year, dwelling values decreased by minus 2.1%. Sydney dwelling values are now at minus 7.2%, below the record high, which was January 2022. Sales and listings. So national sales, CoreLogic estimates that there were 39,064 sales in July nationally, compared to a historic 5-year average, 40,120 for the month of July. The 6-month moving trend suggests sales volumes are stabilising despite being down from recent highs in 2021. Median days on market. So the amount of time it takes to sell a property trended slightly higher through the 3 months to July, with the median days on market edging higher to 34 days. This was up from a recent low of 30 days in 3 months to April. Median days on market held steady on the previous reporting period across the combined capitals at 28 days. Listings. In the 4 weeks to July 30, new listings totaled 33,616 nationally. New listings trended slightly higher through July, which is unusual for this time of year, they say. However, new listings remain slightly lower than the historic 5-year average. The rental market. So Australian rent values increased a further 0.6% in July, taking the national annual increase to 9.4%. Annual growth in rent values remains elevated on the previous decade average, but has shown signs of easing. Growth in rents declined from a 10.2% high over the 2022 calendar year. Rental yields. Against the monthly increase in values of 0.6% nationally, purchase values rose by 0.7%. This created a marginal reduction in the national gross rent yield to 3.83% from 3.84% in the previous month, as the housing market moves through an upswing and the pace of rent increases decline. Yields are likely to compress in the short term. Finance and lending. So the combined value of secured housing finance declined by minus 1% in June, off the back of a strong 5.4% increase in May. The decline was led by the owner-occupier, non-first home buyer segment, which was down minus 1.9% in the month. First home buyer lending rose by 4.3%, while investment finance increased 2.6%. Nationally, investor finance comprised of 35.3% of new mortgage lending through June. This rose from 34.1% in the previous month, as monthly growth in investment lending outpaced the decline in owner-occupier lending. First home buyers. So the value of first home buyer finance rose 4.3% through June, following a slight easing in May. First home buyer finance accounted for 26.0% of owner-occupier finance in the month, which is above the decade average of 23.8%. And lastly, the chart of the month that CoreLogic have chosen to show. Growth in national rents reached 35 consecutive months in July, the longest stretch since 2013. So if you are looking to sell or to rent out your property, please get in touch with us. We'd love to help you.